Hey, welcome back. In this episode, I'm going to be talking about how to buy land when you already have a mortgage. All right, you might be thinking about buying land or getting a piece of land next to you, or maybe buying a piece of land to build a house on one day, but you already have a mortgage. What in the world can you do? In this episode, I'm going to show you exactly how to get around that. All right, in this episode, I'm gonna give you several steps of how to purchase another piece of land or buy your first piece of land when you already have a mortgage. I'm gonna give you multiple steps to follow so you can do it as well. Hey, my name is Brent Bowers, and I've purchased over 271 parcels of land. I have 100 notes coming in that are where they're actually paying me on parcels of land that I've sold. So it's giving me financial freedom as well as time freedom and geography freedom, lifestyle freedom, you name it. But when I started this, when I was doing this business, when I was just getting this business off the ground, I too had a mortgage. So don't let that mortgage get in your way. It is nothing. It's not going to hold you back at all, because most of the time the bank is not going to lend you money on land anyways unless you come up with about 50% down. So really, having a mortgage and buying land, the two don't collide whatsoever. So I'm going to give you the first step that I talk about, and that is buying land for cash, getting a cash discount. You might be thinking, oh my gosh, I don't have cash either. I have a mortgage, that's why I don't have cash. Well, I'm going to show you ways to get cash to buy the land and get crazy discounts on land. All right, I call the cash method the discount method, because at the end of the day, if you're walking around with cash, you should be able to demand a discount. Well, let's say you don't have cash and you're not walking around with a ton of it. I'm going to show you how to find cash to get a discount on your property. We talked about having a mortgage on your house. Let's just say you bought your house a few years ago and you've built up some equity in your house. So banks love giving out a HELOC, which is a home equity line of credit. So they want to see that you have a job, you have a good credit history, and you have some equity in your home. And with the real estate market, everyone's homes are building equity right now, especially if you bought it several years ago. So this is a way to tap into your home's equity for a very, very low interest rate. And check with your CPA on this. Some rules have changed, but you used to be able to write off the interest that you pay on a home equity line of credit if it was for a home improvement. So check with your CPA on this, see how you can almost maybe even write off the equity or the interest you're paying on your home equity line of credit. And right now, rates are at all-time low. So it's getting easier and easier to get a home equity line of credit. Where to go to get a home equity line of credit? The first place you could look at is where you have your bank accounts, because they're already going to see your history of what you do in your bank account, that you do have a job, that you do have income. The next place would be your local community bank. And third would be local credit unions. These are the easiest places to get loans. And I'm seeing home equity lines of credit right now, sometimes less than 3%. So let me explain to you how home equity lines of credit work. You only pay interest on what you've borrowed. So let's just say you have a $20,000 home equity line of credit and you've only used $5,000 of the $20,000, 5 out of the $20,000. Well, you're only going to pay interest of 2 or 3 or 4%, whatever your interest rate is, on $5,000. And sometimes you can choose the interest only option. So it's only literally 3% interest on $5,000 per annum. So it's like a very, very low payment. Or you can select the other option that actually pays down that balance within 36 months or whatever. So you got very, very, it's very flexible. You got a lot of options with home equity lines of credit. And here's the thing, the banks like for you to actually pay these down quicker. They don't like for you to leave a balance on it for a super long time, because eventually most home equity lines of credit will end at 10 years and then you can reset these. So these are very flexible. At the end of the day, you might not have the land picked out yet, but go ahead and start working on this home equity line of credit. Generally, it takes 45 to 60 days right now to get a home equity line of credit in place on your house. And obviously, talk to your partner about this. Talk to your spouse, your husband, your wife about this, because you never want to go and pull out a home equity line of credit without your spouse knowing, your partner, your husband, your wife. So definitely talk about this and communicate it very well before you go out and take these next steps. All right, another way to buy a piece of land when you already have a mortgage is get the seller to carry seller financing. This takes no credit. This doesn't take anything. This is super easy. Oftentimes, sellers are willing to finance their land because they know banks won't allow the financing, or banks won't finance the land unless you come to the table with like 50% of the actual amount that you're paying. So for example, paying $100,000 for the land, you literally have to come to the table with $50,000. Well, most people aren't walking around with $50,000, so sellers are more willing to seller finance or do what we call a seller carryback if you can buy their property. And most of the time, how these sellers figure this out is they put their land up for sale and it sits there and it sits there and it sits there and it sits there. Might even have it listed with a realtor, and you can go in and make an offer for exactly what they're asking, but ask them to hold the financing, hold the seller carryback. And oftentimes I'm seeing sellers where land we buy, they'll literally do 0% interest if you give them the terms that they're looking for or the amount of money they're looking to sell their land for. I want to give you a quick example of a deal I did in 2016. The seller wanted $30,000 down and was willing to hold a mortgage for me at $45,000 at 0% interest. This was a principal only payment. So every time I paid a payment of $400, that $400 came off the balance each month. And oh, guess what? We were renting out the barn that had a studio apartment in it. So I was actually paying the mortgage to the seller with the tenant income. And then I rented out the pasture, the 14-acre pasture, to a friend of mine that runs cattle, and that got me another couple $100 a month payment. So that allowed me to pay a lot of money towards this buying this land, but also allowed me to put money in my pocket each month as actual profit. So I got the land, I got profit, and it paid down each and every month. All right, so I talked about, the seller wanting $30,000 down for this land that he's financing me. And he didn't care that I had a mortgage on my house. He didn't even ask me. And he was willing to hold the financing for $45,000 at 0% interest. But I had kind of a dilemma. I didn't have $30,000 just sitting in an account. It was 2016. The Army just moved me across the country. I was a brand new Army officer. We had just had our first baby, buying another house. I needed a roof, and you name it. Money was flying out of all my pockets and my wallet all at the same time. But I really wanted to buy this piece of land because one, it was actually 14 acres in Florida. They're not making any more land in Florida, by the way. Two, it was right next to my parents' property, so we were actually going to be adjacent. So they had 21 acres and I was going to have the 14, so it would have made a beautiful piece of land for children to play. But here's the thing. I came up with a way to get that $30,000. Even though I had a mortgage, I called a lending company, USAA is who I used at the time, but they gave me a signature loan for $30,000 at 14% interest. I say that 14% interest, I don't want to scare you, but that 14% interest, I knew that was a hefty interest rate. That payment was like $500 a month. And I also had to pay the seller $400 a month. So I'm looking at a $900 a month payment. Now, I leased out the land for cattle. I leased out the apartment. It was actually rented already. I was actually able to pay for these things with leasing this land, and I was paying down the mortgage while paying down the $30,000 down payment. But at the end of the day, I got resourceful. I didn't have the money, and I found it, and I paid that $30,000 loan from USAA off in a matter of 6 months by going out there and hustling and doing some other deals that brought me $30,000 profit, to where I was only worried about paying $400 a month to the seller for the seller carryback. And now I can proudly say this land is completely paid for. All right, so I'm sure you're getting tons of value out of this. Go ahead and hit the like button and also subscribe to my channel. I come out with these 5 days a week. I'm the only guy on YouTube talking about land right now, so I want to keep bringing you value. So go ahead and hit that like button and subscribe at the same time. Double tap and let's go. Let me get to my final point, and I'm going to call that the bank of mother-in-law. I didn't even realize it. My mother-in-law was willing to lend me and my wife, her daughter, $50,000 on another deal we were doing. And thank God, she came out of the woodworks with this. We were actually buying a property, and we were $50,000 short, and I had to find a private lender somewhere. So she actually lent me the money, and we paid her an interest rate. We set up all the documents, the deed of trust and the promissory note. And if you're not familiar with these documents, your title company can do these for you. You want to always protect your lender that you're using to purchase a piece of property, and have the terms in place. We agreed that I was going to pay my mother-in-law back in the next year at a certain interest rate. And if things would have went south, I still would have been obligated to pay her back because obviously it's my mother-in-law. I don't want to ruin the relationship, but we paid her back sooner than planned as well as more interest than planned, just so with the next deal that came around, she'd be more apt to, be willing to do that. And she didn't have to do that. But all I'm saying is you can buy land while you already have a mortgage, and there's lenders out there that you might not even think about, like your mother-in-law or your friends. The seller will hold the financing. Home equity lines of credit from a community bank. There's so many options, so don't let having a mortgage get in the way with buying a piece of land. All right, so as you know, the real estate market is popping hot right now. If you want to, maybe this gave you some ideas. Maybe you want to get rid of that mortgage you have on your house, and how in the world are you going to do it? Start a business today that pays you, serves you and your family and others, and gives you lifestyle freedom and financial freedom and time freedom and geography freedom. Well, I run a very successful coaching program that's built on tried and true methods. I've done over 271 parcels of land deals, 271 land deals, and I'm teaching others how to do it. So if you're interested, go down to the description below, and that's thelandsharks.com, thelandsharks.com. Check us out, schedule a call with me and my team, and if we feel like we're a great fit, I'd be honored to coach you.